Welcome to the deep dive. We're looking at some really interesting source material today. Lots of movement in the crypto
Yeah,
markets.
definitely some significant shifts.
Our goal, as always, is to unpack the key stuff from these reports, figure out what's driving these changes, what the big players are doing, and what's happening on the tech side.
Makes sense. Where should we start?
Let's jump straight into where the money's flowing. The sources had some pretty contrasting numbers for Ethereum and Bitcoin.
It really did. Ethereum saw some pretty substantial inflows, right? $321 million.
Wow, $321 million. And the report said that's its best six-week run since early 2024.
Exactly. Pretty strong signal there.
Especially when you compare it to Bitcoin. The same sources mentioned outflows there.
Yeah, though much smaller, about $8 million out.
Yeah.
But still, it's that difference, that divergence. That's interesting.
So what's the thinking behind that? Why ETH in and BTC out, according to these reports?
Well, the analysis connects it mostly to macroeconomics. For Ethereum, the idea is that anticipation of the Fed may be lowering rates later this year. That boosts confidence in assets seen as maybe a bit more risk-on, like ETH.
Okay, so rate cuts potentially helping ETH. What about Bitcoin's outflows then?
For Bitcoin, the reports mention things like proposed aggressive tariff policies, creating a bit more, economic uncertainty. That might make some investors maybe de-risk a little from Bitcoin in the short term, seeing it differently than ETH in that specific macro context.
So different assets reacting differently to the same broader economic news.
Precisely. It shows how nuanced investor responses can be.
Got it. Now, it's not just trading flows. We also saw reports about companies making direct buys, like Metaplanet.
Right, Metaplanet, the Japanese firm, they're still accumulating aggressively. Just bought another, 1,088 Bitcoin?
1,088 BTC. That's quite a chunk. What does that bring their total to?
The sources put them at 8,888 BTC now, which is valued around $930 million. And they're not shy about their plans either.
Ooh, what are they saying?
The reports mentioned their public goal is to hit 10,000 Bitcoin by the end of this year.
10,000 BTC by year end. That's a bold statement. What does this tell us, big picture?
It really highlights that growing trend of, companies using Bitcoin as a treasury reserve asset, especially outside the U.S. perhaps.
And it's more than just buying, right?
Exactly. The sources suggest firms like Metaplanet are signaling this as a long-term strategy, hedging against currency issues, inflation. It's becoming a more open corporate strategy than maybe it was a couple of years back.
Okay, let's switch gears a bit. From corporate buys to digital assets themselves. NFTs. Saw something about Yuga Labs.
Yeah, Yuga Labs selling the IP for the Moonbirds NFT collection.
Moonbirds IP sold off. To who?
A gaming startup called Orange Cap Games.
Interesting. Why would Yuga sell a known IP like that? What's the strategy, according to the sources?
Well, the analysis suggests it lets Yuga focus more on its core stuff. Bored Apes, other side. Streamlining, maybe.
And for the buyer, Orange Cap Games.
For them, it's about getting a recognized IP they can build games around, integrate deeply. The sources kind of interpret this as NFTs moving beyond just profile pics.
More towards actual utility within platforms.
Yeah, like using the IP as a base layer for gaming or other interactive experiences, maybe a shift from broad collectibles to more specific uses.
Makes sense. Okay, speaking of base layers, let's talk tech. Vitalik Buterin proposed something for Ethereum.
Yes, a pretty major proposal, actually. Increasing Ethereum's Layer 1 gas limit by tenfold.
10 times the L1 gas limit. Wow. Why focus on Layer 1 specifically?
The goals outlined in the reports are all about enhancing the base layer's scalability, security, and importantly, its censorship resistance.
So it's partly a response to concerns about Layer 2s.
Kind of. The discussion in the sources mentions addressing potential issues with L2s, like centralized sequencers or censorship risk. By making L1 stronger, the idea is to provide a more robust foundation.
A foundation that can better support dApps directly, or even cross L2 stuff.
Exactly. Support complex applications, facilitate smoother transfers between L2s, all with more security guarantees from the base layer itself. It's ambitious, technically challenging for sure, but signals a commitment to strengthening that core protocol.
Definitely want to watch. Okay, back to corporate strategy, but like really big scale this time. SharpLink Gaming.
Oh yeah, that definitely made headlines. SharpLink Gaming announcing plans to buy, get this, $1 billion worth of Ethereum for their treasury.
$1 billion. In ETH. How are they funding that?
The sources detail they plan to use proceeds from selling shares, a private placement, PIPE deal, 69.1 million shares at $6.15 each.
Funding a massive ETH purchase by selling stock, that's taking corporate crypto adoption to another level.
It really is. And the sources frame it as a clear example of companies tapping into investor interest in crypto.
And how did the market react?
That's the key part highlighted in the reports. SharpLink's stock price surged. Big time.
So investors liked the news.
Very much so, it seems. It suggests the market views these kinds of large strategic crypto allocations by public companies quite positively, almost like a growth driver in itself for some stocks.
Okay, so we've covered quite a bit today. Macro affecting flows, big corporate buys like Metaplanet and SharpLink, NFT IP changing hands, and fundamental tech proposals for Ethereum's base layer.
Yeah, pulling all these threads together from the sources,
Right.
you get this picture of a market that's, well, maturing in some ways with more institutional and corporate money coming in.
Right, getting more professionalized.
But at the same time, it's still innovating like crazy at the tech level and finding new applications.
Yeah.
Like with the NFT IP moving into gaming, it's still very dynamic.
Absolutely. It leaves you with a big question, doesn't it? How do all these different forces, the economy, the tech changes, these bold corporate moves, how will they all weave together and ultimately shape the future of this space that you're involved in?